name is Tamara Visor. I will be speaking to you about the information technology industry outlook. Just for some facts, the U.S. does account for 31% of the IT industry. This year, it is projected to see a 5.0 growth in the industry of technology. Not only that, IT spending is projected to surpass $4.8 trillion. Samsung does aid in the products for China, Japan, Australia, and India. Just to go back to what the U.S. does spend their money on, as far as the industry goes, it is stated that the software spending does account for 18%. The infrastructure spending for the IT industry does account for 17%. IT services and other emerging tech does account for 12%, and telecom does account for 23% in the industry. Moving on to Samsung's history. Samsung was created by Moon Chul. Not only that, Samsung is a multinational conglomerate and is the largest South Korean conglomerate. If you didn't know, Samsung did have its humble beginnings with the start of March 1st, 1938, as a small trading company based in Daegu, Korea, trading grocery supplies such as dried Korean fish and noodles. Samsung is a fierce competitor when it comes to its innovative TV, cell phones, and semiconductor chips. Samsung is the world's 18th largest organization. That concludes the history, and thank you.
Hi, I'm Taylor Barnes, and I'm talking to you about Samsung stock price analysis. Samsung is in the Korean market, not the U.S. market. And if you want to invest, you must find a Korean broker or Merrill Lynch. Their stock price went up because of their sales in headsets and chips. And with the stock steady increase from 2015 to 2017, they hit a high in 2017 with $2,376, and with that high in Korean wons is 2,631,915 in Korean wons. And they hit a split in the stock so they can make it affordable to the public and they can have an increase in investments. And so their new price for US is $38, and with Korean wons that's 42,500. And that's all when it comes to Samsung stock price analysis. I'm Taylor Barnes. Is the ability to pay short-term obligations. Why is it important? If I give you money, can you pay me back? Well, let's see if Samsung can pay their people back. With their current ratio in 2017, it was 2.19 versus the industry being 2.31. So that means the current ratio for Samsung is very low. Is very low. And to get that, you put your current assets over your current liabilities. And with the quick ratio for 2017, Samsung had 1.71 and the industry had 1.36. So Samsung is above the industry right now. With financial leverage, it's 1.46, and for the industry is 1.17. And as you see again, Samsung is on top. But with that being said, over leverage in comparison. And lastly, debt and liquidity for Samsung is 0.01, and it's been 0.01 for 3 steady years. And in the industry, it's 0.05, and Samsung is actually below, but the company overall is in good condition. And that's Samsung's liquidity for you.
I'm Anthony Miles, and I'm here to let you know about our company's risk management. And to give you an overview of what risk management really is, or financial risk, it's basically the measurement used to assess a company's capital and risk level. And one of the ratios that we used in specific is our debt to equity in order to measure. And with that, Samsung's debt to equity has basically remained constant, about 4 to 5 times less than the industry average over a 3-year period. This basically means that the company can indicate cash, satisfying their debt obligations. Another ratio that was used to measure this was our debt to interest coverage. And with that, it's basically been continuous, beating the industry average by about 2 to 4 times in their debt to interest coverage. Again, my name was Anthony Miles, and in closing, that was basically the overview of our Samsung's risk management. All right, and now we're going to talk about Samsung's profitability. And this is basically the ratios used to assess a business ability to generate profit. In short, can this company make money? With the ratios that we use to assess that, we use the tax rate percentage, which was 24.93 in the year 2017, which was about 1.41 times less than the industry average. And also our net margin percentage, which was 17.26 in the year 2017, which was 1.39 times higher than the industry average. And basically, the return on equity, along with the industry average, has been basically up and down for the past 3 years. And in closing, basically, Samsung is profitable, which can positively affect the investors. And again, I'm Anthony Miles, and this is my brief overview over Samsung's profitability.
So my name is Theandra Gibbons, and I'm going to be talking about Samsung's asset management. So what is asset management? So by definition, asset management is the measurement of a company's performance managing their assets. So are they doing this well? And why this is so important is because the assets will convert into revenue, which is money. So currently, Samsung's return on assets is 14.66, while the industry is 0.07. So Samsung is killing it. This is almost 200 times the industry average, and this has been over the past 3 years. So as we go down and we analyze the return on equity, we see for the past 3 years it has been steadily going up. It's more than 140 times the technology industry average. The technology industry average is only 0.15, whereas Samsung is 21.02. Oh my goodness. So it's safe to conclude, based off these couple of ratios that we've done, that Samsung is managing their assets very well. And so that's the end of my presentation. Hope you enjoyed. My name is Theandra Gibbons. My name is Theandra Gibbons, and I'm going to be bringing to you Samsung evaluation. So what is valuation of a company? So the valuation of a company is the process of determining the current worth of an asset or a company. And so here's some of the ratios that we use to evaluate Samsung stock. The first thing that we use is price to earnings, price to book, price to sales, and price to cash flow. And we saw across the board that in price to earnings, price to book, it was 3 times less than the industry average. So this is not looking too good for Samsung. And we also saw that price to sales, it was below the industry as well. So based on our analysis and based on the ratios that we found to the conclusion that Samsung stock is pretty undervalued. Well, that's it, folks, for Samsung's valuation. Thank you.
Hi, my name is Abidemi Omolaja, and I'll be talking about dew point analysis for Samsung. What is dew point analysis? Dew point analysis is a technique that is used to decompose 3 different techniques for an ROE, that is the return on equity. And what is return on equity? Return on equity is a measure of a company's annual return or net income divided by the value of its shareholders' equity. It is also an insight on how the management is using the financing from equity to grow the business. And dew point analysis is gotten from the World Dew Point Corporation in the 1920s. And the formula for return on equity is net income over sales, which is the assets turnover, which is the first leg of the 2 point on return on equity. And then the second one is sales over total assets, which is the profit margin. That's the second leg. And the third leg is the total asset over shareholders equity, which is the financial leverage. Now I'm going to be showing you the chart of our DuPont analysis that we've been able to put up together. So this is the return on equity, and then it is broken down into three, like I said earlier, which is the profit margin, assets turnover, and the financial leverage. And then the profit margin is broken down into two, which is the operating income and the earnings before interest and taxes. And the asset turnover is broken down into two also, which is the operating income and the total asset. The total asset is broken down into two, which is the current asset and the fixed asset. And then the current asset is broken down into three legs, which is the inventory, account receivable, and then cash and equivalent. And while the earnings before interest and taxes is broken down into three legs, which is the operating income, operating expense, and non-operating income. Thank you. Now I'm going to be talking about the overall health of Samsung. Samsung is continuing to grow and gain profit in the market at high rates. From financial statements of the last 3 years, the company has clearly showed the track of the progress. Now let's look at the profit between 2015 to 2017. For 2015, it is 38.5%, 2016, 40.4%, and 2017 is 46.0%. We can say, like, Samsung is good regarding the profit-wise. And for liquidity, it means it's readily able to convert their assets into cash to pay off debt. And for profitability, it is very profitable, and it could affect the investors positively. And for the risk management, it is for Samsung. In year 2017, it is 1.46, and for the industry as a whole, it is 1.78. So we can say that it is less risky, so therefore it is a good company to invest in. And for asset management, it is safe to conclude that Samsung is probably managing their assets. And then for valuation, it is undervalued. Like industry average industry is more valued than Samsung, but therefore we can conclude that Samsung is a very healthy company, and then it is advisable to invest in Samsung. Thank you, and this comes to the end of the presentation. Hope you enjoyed it. My name is Abidemi. Thank you.